What's up, Facebook? Ty Crandall here with Credit Suite. Today, we are going to be decoding your third type of credit score, known as your bank rating. A lot of people don't even know that this exists. And today, we are going to be diving in. We're going to be talking about exactly how this works, exactly what it is, and why you need to know about it. So look, you're probably familiar already. No. You are definitely familiar already with consumer credit, right? You know consumer credit that's linked to your social security number, that you build a credit report, you build a score, you qualify for credit lines, loans, and all kinds of cool things for you as an individual. You're obviously familiar with that kind of credit. And hopefully, if you're watching and following us, you're becoming more familiar with business credit, otherwise known as corporate credit as well. The second type of credit you have as an entrepreneur, you have your consumer credit and you have your business credit. Okay, and business credit, corporate credit status is credit for your business. It's a credit report and score that you're building for your business EIN that you're then able to use to get all kinds of credit without a personal guarantee and credit check, and make it easier for you to get financing for your business as well. That's the second type of credit. Today, I'm going to introduce you to your third type of credit that most people know absolutely nothing about. Michael, what's up, man? Welcome. Thanks for coming in. And this is called your bank credit, or it's also referred to as your bank rating. And here's how the system works. Here's what you need to know and when you need to know about it. So there are actually three types of credit you have as an entrepreneur. You have the consumer, you have the business credit, and you also have bank credit. And bank credit basically is your ability to borrow money from the banking system. So that means if you ever want to go get a credit card or a credit line or a loan from a major bank, a conventional bank we call them, Chase, Bank of America, Regions, a big bank, you need to know about this because this is the score they're using to determine if you should be given that loan, credit line, or credit card. Steve, hey, welcome. Thanks for coming in. Sister, hello. Thanks for coming in. So that is what your bank rating is. Your bank rating is a credit score and a credit profile that's housed only by the bank that determines, I shouldn't say credit profile and score, I should say a rating system that's used to determine how much money you could actually borrow from the banking system. Here's where you don't need to care. You don't need to care for business credit building. This has nothing to do with building business credit. And this has nothing to do with getting money from alternative lenders like On Deck. This has to do with getting money from the big banks like Chase, Bank of America, etc. The SBA loans, the credit cards, the credit lines you may go to apply. So if you're going to look there for money anywhere down the future or now, you need to know how the secret bank credit score really works. So let's go to the chalkboard today. We're going to talk about how you can conquer the secret bank rating. So remember, there's three types of credit as I just mentioned. You have consumer credit, right, linked to your social. Business, or sometimes called corporate credit, linked to your EIN. Third type of credit here is bank credit. This is a score, a rating you'll never actually physically see, you'll never know about. It's only available from the bank. The bank, your banker, the underwriters at your bank are the only ones that would ever see this. So when we look at bank credit, what it really is your full borrowing capacity from the banking system. So what this basically means is your ability to borrow or get money from the banking system, and that means from major banks, the big banks, Chase, Bank of America, Regions, etc. Now, this is, I mentioned, only from conventional banks, okay? It's only from conventional banks. It does not apply to On Deck or Seed or Seek Capital or all these amazing alternative lenders that are going by a strength like cash flow, credit, or collateral. It's only the big banks, the Chase, the Bank of America, etc. Michael says, the writing on the chalkboard is so perfect. I know, right? This is my chalkboard artist actually did this. Check this out. Look at this. Isn't she amazing? Not to get off topic, but I mean, it is insane, the artwork that she does. So yeah, I agree. Great writing. You should see what mine really looks like. Okay, so full borrowing capacity only for the big banks. Very important for SBA loans. I'm going to say very important. Squash that out. I'm going to put absolutely crucial because you can't get this without having an acceptable bank rating, and I'm going to tell you what that is in a minute. So the primary driver of this bank rating is your daily account balance over the most recent 90 days. So what they're looking at is your average balance in your bank account over a 90-day time period. Now, this isn't the only driver, but this is the main driver of the bank. So first of all, first lesson is that if you're not going to go to a big bank to get money, you don't care. You should know about this because I'm really big that if other people like banks, lending institutions, suppliers, credit issuers, credit bureaus, if these guys are making lending decisions about you, then you need to know the information they're using to make those lending decisions. I'm really big on that kind of transparency. But the reality is this mostly is applicable when you're getting any money from your bank. First rule. Second thing, What you now know is that it's based on your average bank account balances primarily, there's other factors we're going to talk about, over a 90-day time period, 3-month time period. What this means is it means that if you're going to apply for a credit card, credit line, SBA loan from a major bank, at least 90 days before, you need to start paying very close attention to what I'm teaching you here. Because if you get the bank balance high enough within that 90 days, it doesn't matter what you did 4 months ago, 5 months ago, 6, none of that matters. All they're doing is just looking at the last 3 months, looking at your average bank account balance, and that's the primary driver of the score. So rule of thumb, when you're gonna go apply for a bank, you should know about this and start getting the proper funds into your bank account at least 3 months before, so you have acceptable enough bank rating. So here's how this bank rating actually works. There's only what's called high, mid, and low 5 rating, high, mid, and low 4 rating. Now, what's lendable are 5 ratings. What's not lendable are 4 ratings, even a high 4, unlendable. So the goal here is to get you into the 5s and stay out of the 4s. Now, that score is primarily driven based on bank balance. So the highest score you're going to get is if you're maintaining more than $70,000 on average in 90 days in your bank account. A mid 5 would be 40,000 to 70. A low 5, the only acceptable lendable score bank rating you can get is a low 5, 10 to 39,000, which means you need to keep an average balance of at least 10 grand in your bank account before you ever even think about walking into a major bank to get financing, especially an SBA loan, okay? Now, if you don't have that, you could fall into a high, mid, or low 4. High 4, 7 to 10,000 in the bank account. Mid, 4 to 7. Low, 1 to 4. Okay, so that's how it works. But remember, we want to stay out of 4. We want to go here for 5. You got to be at 5. You got to be at this in order to qualify. Now, there's a lot of other things that can affect your bank rating as well. So again, the rule of thumb here is that before you apply for a bank loan, make sure you have at least $10,000 in your bank account for 90 days prior to application. Remember, we are not talking about alternative lenders. We're not talking about Seek. We're not talking about Seed Capital. We're not talking about On Deck. We're not talking about peer-to-peer lenders like, Lending Club. What we're doing is talking about the major banks here. Don't forget that. So, ways to improve this rating. Obviously, keep $10,000 in the bank account over a 90-day period before you apply. That's the obvious thing to do, right? Based on what you now know. You want to open an account right away. The reason for this, there's many benefits of opening a bank account right away. The first benefit is that a large part, if you ever have a shelf corporation or things like that, a lot of lenders will look at your bank account start date as your company start date. And here's why. Because a lot of people form entities and never do anything with them for a while. But if you're really going to do something with a business, you're typically going to open a bank account. It's one of the first actions you take because you need to receive money and you also need to pay checks. So most people that open business bank accounts are doing so because they're ready to actually take action on the business. So by having your bank account open longer, then it helps you because it makes your business look more credible, because a lot of lenders or credit issuers will look at that as being the first time you really started doing operations. The other reason is because of your bank rating. So your bank rating, part of the factors that ties into this is the length of time you've had your bank account for. The longer the business bank account's open, the better it is for your overall bank rating. So another reason that this is so important, you need to have consistent deposits over time. So think about a real estate agent. They don't have consistent deposits. What they have is a deposit here, a deposit there, and it's just kind of scattered and there's not a lot of them. What they're looking for is regular money coming in the bank account on over a regular time period. Think of it like this. I can't say this enough. The number one primary and fundamentally almost only real thing lenders care about is your ability to repay them. All the junk they ask you for, the documentation, the questions, it's all based on them just trying to figure out if you're going to pay the bill or not. That's what they're really looking for, okay? That's what they primarily care about, is if you're going to pay the bill or not. So when we look at consistent deposits over time, what we see is we see consistency. Okay, so what that means, obviously, it's consistent deposits. So what I mean is this. If you're a real estate agent, you have 3 deposits in a month. What happens next month month if you only have one? Would you be able to pay the loan if only one of those 3 deposits had took place? That's what banks are concerned with. So what they like are retailers, right? Retailers are depositing money every single day in their bank account because that's the way merchant accounts work. They go ahead, they process credit cards, the merchant account deposits money Monday, Tuesday, Wednesday, Thursday, Friday. There's consistent deposits. The banks see a lot of money coming into the account on a regular basis, and they know even if 5 or 10 of those transactions didn't happen, no big deal. You'd still be able to pay anything that you're borrowed, or you'd still probably have a good chance of paying what's borrowed because you're having those consistent deposits in the bank account. So not having consistency with deposits really creates an issue. And I'll tell you something else that does is a decrease in this. When you have fewer and fewer deposits, that's an indicator of a business that's declining, not growing. Okay, you also need to put more money in than you're taking out. Okay, this is called this is really what they're looking for is greater deposits and really higher, basically positive cash flow is what we're looking for here. So what they want is they want to see that you're putting more money in the bank than you're taking out. Okay, that's positive cash flow. You're depositing $10,000 this month, and you took out $9,000. Last month you deposited $12,000, and you only took out $11,000. You're putting more in than's coming out. Okay, so that means that your balances are typically growing. They don't want to see non-sufficient funds at all. Overdrafts. These are very, very, very bad. Now, you should know about, if you don't already, is check systems. And you can go to creditsuite.com/check systems, and check systems is CHEX. CHEX systems. SYSTEMS. So our check systems, we have a link on our website. I'm trying to pull this up right now to make sure I have it right. Our check systems link, if you go to creditsuite.com/check systems, we give you everything you need to know about check systems. Okay, this is exactly what it is. I'm going to show you here. It's creditsuite.com/check systems. It's one of the most important links you're probably going to see here today, at least. And what this does is it gives you everything you need to know about check systems, okay? You can pull your report. You can add a security freeze. You can add a security alert. You can get your credit score. You can lift a security freeze. You can dispute accounts, all right here at this link. And guess what? 100% of that is free. I just went ahead and got all the links for you and created a page on our website that gives you those links. So now I'm having a hard time getting my screen to come back to me. It won't come back to me. Okay, so check systems, here's why you need to know. Most people don't realize this, but you have another credit score and profile that's completely based on your bank account history. Yeah, that's right. All of your bank account, how you've managed your bank account, every non-sufficient funds you ever had in your life, it's all housed on a credit report, and you're issued a credit score that is from check systems. And this is from anybody that's interested in that's trying to lend you money, for example, that's interested in how you manage your bank accounts. So most people don't realize this. There's an entire credit score and a profile that's built with their entire banking history on it. It's pretty freaking scary. That's why we created creditsuite.com/check systems that lets you get your report for free, lets you get your score for free, lets you remove security alerts, add a security freeze, and it even lets you dispute information you see on there that's inaccurate. So everything you need to manage check systems you should know about. Now, the reason I tell you this is because non-sufficient funds also go into check systems. So not only will reducing checks and non-sufficient funds help your bank rating, but it's also important because all those non-sufficient funds you have are actually housed on your check systems, your bank account, credit report, and score. So now you know how to get that and you know what to avoid. The other thing is other services like CD accounts, other accounts that you have with the actual bank. The more accounts you have with the bank, the more it helps your bank rating. So what I mean by this is that, for example, with us, we have a checking, a savings, and a money market account. We have 3 accounts. So that gives us more credit with the bank because we have those 3 accounts. Now, here's a huge important disclaimer. Only have all of your deposits go into one account. Then distribute them to the other accounts. And here's why. Because when it comes to getting revenue financing and getting merchant cash advances, there's a lot of money that's going to look at your business bank account to determine approval. And they'll only look at one account, not multiple. So if you had 2 checking accounts and deposits went into both, you'd only ever get credit for deposits into one of those 2 accounts. And it could really ruin your ability to get financing. So all deposits come into one account. My advice there is open up a savings, open up a money market, open up a couple other accounts that you you can move money to, because the more of these accounts that you have, not the more, but by having a diversification of accounts with the bank, it also helps your bank rating as well. So Brian says, interesting, glad you like it, man. And Steve says, I bought $140,000 yesterday for $69,000 from an auction site, have a couple weeks to pay. I don't know why, but for some reason, Facebook doesn't let me hit the see more button. I don't know exactly why, but for some reason it shows me part of your comment now, but not all of it. So Steve, type in the rest. I can see I bought $140,000 yesterday for $169,000 from auction site. I have a couple weeks to pay. I have, and that's all I have. So type in the rest of the message and I can finish it. I've tried multiple times, but for Facebook Live, for some reason, when I go to hit see more, it will not leave me an option of seeing. Oh wait, here we go. Look at that. Pulled that up, man. All right. Let me see if I can answer your question now. I have a couple weeks to pay. I have about 130 or so available credit on the credit card. So use thinking the 0% card advances plus advance fee, then get long-term financing and flip it. Sure, absolutely. That makes sense. Unless you have a better idea, house needs 30K. That's exactly what a lot of our clients are using unsecured credit, just like you described, to buy physical property. They're fixing up the property. Now, a lot of our clients are using business credit to do the fix and flip. They're using Home Depot, they're using Lowe's, they're using Labor Ready to get the supplies and everything that you need to do to fix the property. And then you turn around and then you flip the property. Then you pay off those credit cards and do the same thing. Now, when you have about 3 of those flips, you want to let us know, because there's actual flipper financing that's specifically for the purpose of flipping properties that can help you if you have about 3 of those under your belt. So hopefully that makes sense. Hopefully that answers your question as well. Okay, so back to chalkboard as we wrap up. You also want to get bank references. You need to have a bank account, because by having a bank account, you're going to get bank references, and that will sometimes be asked for on your applications. Now, if you're interested in monitoring your credit reports for business, you can go to creditsuite.com/monitoring. We just added a brand new feature that's up for a limited time because we're beta testing it, where you can now, for the first time in history, add utility accounts, even cell phones, to your business credit reports. You can do that with Experian and with CreditSafe right now at this time. We're only keeping this up for a limited time since it's a beta test. creditsuite.com/monitoring. Don't forget, creditsuite.com/check systems will get you access to your check systems bank, or your check systems credit report, which is your banking credit report, how your banking history is rated, your profile, your score. That gets you your report, it gets you your score, security freezes, alerts, disputing. It's all free at creditsuite.com/check systems. So there's a couple links for you. So I'm going to go ahead and wrap up, but that gives you, and I'm going to try to figure this out. Steve, I was able to pull up your message. Now I can't. Okay. So that hopefully answers all of your questions about your bank rating. It's the third type of credit score most people don't know about. Only people that need to worry about it is business owners. Only time you need to worry about it is if you're going to get a credit line, or loan from a major bank like Chase, Bank of America. Main thing to do, 90 days before you go to apply for credit with a major bank, make sure you have at least $10,000 in your bank account to have a low 5 rating. A high 5 bank rating will happen with $70,000 on average in your bank account over the course of 90 days. And don't forget the other things you could do as well. Have more money going in than going out. Have consistent deposits. Limit non-sufficient funds. Open your bank account as soon as you possibly can. These are other things that will help improve your bank rating and will help you get loans like SBA, will also help you get credit lines and other loans that are longer term, lower interest. So for any other questions, make sure you reach out to us, 877-600-2487. Don't forget to go to creditsuite.com/monitoring so you can actually grab your business credit reports for only $24. You can even now add accounts to including utilities to your business credit reports there. And if you're interested in getting a guide on building your business credit, go to facebook.com/credit suite. And on our messenger, on our Facebook page, just type in EIN. We'll give you a really cool free guide, and we'll also notify you when we go live every week. So enjoy the chalkboards. They're all getting wiped clean this week, and we'll be starting over with 4 new topics that we'll be diving into over the next 4 weeks. Thanks everybody for tuning in. Don't forget to tune in as we go live here on Facebook every Wednesday at 4 o'clock Eastern. Thanks everybody. Have a great day.